It's common for companies to set up a petty cash fund for times when employees need $5, $10, $20 to pay some small expense that's related to their job. For example, if you tell an employee, look, I need you to do overnight delivery and mail these documents, and they're like, oh, okay, could I have $20 for the post office? They would take that out of the petty cash fund. Or maybe a working lunch, or maybe there's a client that comes by and says, hey, can you pay for my parking? And you say, okay, how much is it? It's $10. Okay, let me just grab $10 out of the petty cash fund. So I want to talk to you about how a company would account for its petty cash fund. So how does it work? First, setting up the petty cash fund. So the company is going to write a check to an employee, and the employee is going to serve as the custodian of the petty cash fund. So someone's going to be in charge of this petty cash fund. Now, the custodian, when they get the check from the company, they're going to cash the check, and so now they've got some cash, and they're going to put that cash in a lockbox, a locked drawer, somewhere where it's not easily accessible, because we're talking about cash. You're not just going to leave it laying around the office for people to just grab whenever they're like, oh, I'm feeling like getting some McDonald's. All right, now, disbursements from the fund. What needs to happen? Well, this is in a locked drawer, lockbox. What you're going to need to do, you talk to the custodian. You say, hey, look, I need $20. I need $25. The custodian is going to need to, typically, they're going to have to put their signature. The person receiving the funds, okay, the person saying, oh, I need $20 to ship this document for the company, they're going to have to sign, right? So you're going to need two signatures usually, and you're typically going to need a receipt to prove that, hey, there was an actual expenditure here. That it wasn't just like the employee took the money and went shopping or something, okay? And so all this information, this is going to be kept in the lockbox or the locked drawer with the cash, okay? So you're going to keep these records. Now, there's not going to be any journal entry recorded until the fund is replenished. When will the fund be replenished? When they run out of funds, okay? So if they run out of funds, the custodian can say, hey, look, we need more money, or at the end of the year before they make the financial statements, okay? So then they would replenish the fund and then make a journal entry at the end of the year. Okay, so let's do an example. The company Frying Nemo Fish and Chips restaurant. So let's say they establish a petty cash fund of $200. So they're just initially setting up the fund. What they're going to do is they're going to debit petty cash and credit cash. Okay, so again, it's just $200 here. So you're not usually a ton of money. And notice this petty cash, actually on the balance sheet, that will be included with cash and cash equivalents. So basically assets go up and assets go down if you're wondering about the effect on the balance sheet of that. So they've set it up. Now they've got $200 in the petty cash fund. The custodian is given a check. They cash the check. They've got $200. Now let's say that the manager or some other employee, they require $32 from petty cash to ship out some documents. They have to do some overnight delivery or something. There is not going to be a journal entry recorded when that happens, right? So the custodian's going to give them the $32. They go and spend it. Okay. Now, let's say the manager or another employee needs $5 to reimburse a client for parking. They take that out of petty cash. So $37 has been removed from petty cash. Now, we get to the end of the year, and the fund is going to be replenished with an additional $37. But we didn't make journal entries when these things happened here. But those things, those are expenses, right? They're small expenses, but they are expenses. So at year end, okay, when the fund is replenished here, we're also going to record these expenses. So we're going to debit postage expense for the $32. That was this here. And then we're going to debit the parking expense of $5. And then we're going to reduce the cash account by $37. That's what happened. This is a journal entry at year end. So now we have these transactions have been recorded. So now they would affect the financial statements. And we've also replenished the funds. So we're back to $200.